All right. Hello and welcome everybody to our final episode of Real Estate Chat. Final episode for 2022. That is 2023 coming up in a few days. And you have here John Perez, which is me, and Robert Eade.
How do you
And
do?
how you doing? So
Pretty good.
what we're going to do today is we are going to pull out our magic crystal ball. Well, Robert has a crystal ball, and he's going to predict what's going to happen in 2023. And based on just a casual discussion before we started filming this, it's going to be not the best, not the worst, but just what, Robert?
Like Goldilocks, just right.
It's just going to be just right. So we're going to have a look at an update on Robert's charts. We're going to touch briefly too when it comes to the foreign buyer ban. Yes, you probably read about this in many of the medias, newspapers, online, social media, all that sort of stuff. Will it have a big effect? Is it something to be scared about, or is it a non-issue? We're going to find that out in a moment. So Robert, let's get started here. And we're going to start sharing your charts here, and let's talk about what's going to happen in 2023 based on what has transpired in 2022.
Okay. 2022 is what's shown on here, and it's showing the last 5-6 months of being half of a hot market and about 40% below average for each one of those months. And that's exactly what you would expect after a boom. Now, there's been a lot of comparisons between 2008 and then 2009, 2009 being the same as what's going to happen next year. And the difference between 2009 and 2023 is that they cut interest rates like crazy in 2009 and threw all kinds of money around to stimulate demand in 2009. And they can't do that next year. So it's not going to be the same magic recovery as 2009. And I have got 2008 on this sales chart. Now there's an estimation based on almost all of the month. 3,300 is pretty lousy month. The 22nd best month since 1996 December. Now it's 27 periods. And so there was 5 worse ones. And that's surprisingly, in the 1996 is when the market turned around, came from doldrums back into boom, and it's been booming through that whole time. So that's all you can tell from December. Same thing happened with prices, which I think is the next one we're going to look at. So this one is a slightly different view of the same chart on sales, except there's more years being compared. And what it outlines here is the same. It was the 22nd best December since 1996. The 5 worse than that were the next year, 97, 98, 99, 2000, and then, as we know already, 2008. However, that was that cycle. Now we're on to the next cycle. If we look at prices and we look at the last 21 years, December fell about 2%, 2.5% from November every one of those years. So I just extended that number onto the November average price, and we come up with about 1050, 1048 as the average price for December of 2022, which is about 9.5% below where it was the year before. So it's just continuing on the trend. We're with what went too high is no balancing out, revert to mean. This is one of the very oldest things, that if you go too high, you go too low, and it's just like elastic band. It finds normal one of these days. So this is again my chart that I use to do the prediction on prices, making a prediction a little bit into the future, and then as each month comes up, saying, okay, what happened in the previous 20 years for November, December's, and even though this is very, very small, it's a working chart that comes up with the information that I just said, that we've seen prices sort of stay flat for the last 3-4 months. And here it's going to maybe just take a little bit dip, but the little bit dip is only because of it's December. And so it always happens that way. Still about 20%, 22% below the peak. And that's the reference point that we have now. From the peak, to where we are now.
So looking at this chart from the peak, we're sitting at about down to 21%, 21.5% from peak. And so when we're looking at it from the perspective of anybody, Robert, who had bought this year, they're down by about 20%, 21% on average. And as you were mentioning earlier, it's not going to be next year where this will recover. It could take 2 years, maybe 3 years. What kind of a price growth are we anticipating? I know that, half kidding when we talked about getting a crystal ball out and looking at what's going to happen in 2023, but based on all of the information you have and based on past history, and considering the fact that there will be further interest rate hikes or possible interest rate hikes at the beginning of the year, which will continue to affect affordability, the spillover of the interest rate hikes just in the past, like earlier this month, what should we expect to see as far as prices are concerned, where they're going to move? And if we're down by 20, 21, 22%, somebody who bought at the peak of this year, how many years will it be before they break even?
Okay. If they don't want to sell their house, then it doesn't matter. And it's going to be like the fellow that bought at the peak of the last time. If they've just taken a 5-year lock on their mortgage and they're not under any stress, if they're on a variable, if a variable went up but they can handle it, then they're not even thinking about selling because they want to own a house. They want to be in that house. They pick that neighborhood for their kids, for all the things that they want. And the price drops that we will see will come from people who are compelled to sell. Somebody who took a variable and they were already here, and now the variable upcharge has taken it to here, and they're just saying, you know what, this house is not, I'm underwater. I'm gonna just bail out. I'm gonna get whatever I can. I had put 150 into it. If I only get 100 out, I got to get away from this. And so they will be the compelled to sell. They'll be the ones that the price will be lower than what they purchased it for. And you'll also see investors who've done the same thing and said, look, we can't get any kind of a rent. I've got no kind of an appreciation, so I'm going to dump. And just like Mitch Corman said to us a couple of months ago, there's no $5 million houses selling. I said, well, there is, but there's fewer. And we just had come through a time when there was a lot of them, because the board stops calculating. It's over $2 million. There was a lot of them over $2 million, but that was what was happening. You had spec market at over $2 million. So that's gone. There's nothing wrong with the market except supply, demand, interest rates, and consumer confidence. So supply and demand are in the same proportions as they've always been. It's just there's fewer buyers. Why are there fewer buyers? Interest rates have knocked a few of them out with affordability, plus this 2% premium that you've got to qualify for because of the stress test. And then consumer confidence. Everybody is very doubtful. If they've been told there's an inverse relationship between interest rates and prices, then they're waiting for the prices to hit the bottom. If you have an optional purchase, you don't have to move. You only move if it's to your advantage. Then you're going to wait until it's absolutely proved to you that you're better off buying that bigger place with a new mortgage that's more than what you can, because there's all kinds of complications coming about portability and giving you a hard time. And okay, they're not making it easy for a buyer to be a trade-up buyer. But the trade-up buyer is all that we have right now. We have a few buyers at the bottom, first-time buyers. We've got no spec buyers. And the thing that I've been saying, that next year, grandma, who has not been putting her property for sale, will all of a sudden put her property for sale on March the 15th, February the 15th, April the 15th, and find there's a glut of properties. And grandma, grandpa are going to have to do something, but they'll be in an ideal position to do it, to make their property overcome the interest rate objection, overcome the payments are too high objection, make their property have a unique selling strategy by using creative financing. Next year will be the return of creative financing, where the seller participates. Maybe even some lenders will get into equity participation, comes kind of fancy things, but right now it's going to be the seller, either with the second mortgage or some kind of a VTB, or who knows what it's going to be. I've got a few ideas we'll talk about some other time. But next year is going to be the year of creative financing, trying to get the buyer over the 2-year hump that everybody thinks is where we're going to be, until the central bank, probably the United States is where the lead comes from, said, oh, I'm killing the whole economy. I can't do it like this anymore, which is what they did in the 70s. They relented and they found they still had inflation, that inflation was still bad. So they had to do it again worse in the 1980s. So Again, we're not world economists. What we are is in the real estate business where people with kids trying to find a home for their family. And you're in the hottest market in the whole of North America. They say to us in Toronto real estate that if you can make it in Toronto real estate, you can make it in New York City. Like New York City doesn't even have an MLS because it's the most competitive, fastest paced, diverse of every single kind of product and mortgage financing combination that you can possibly find. It's happening here. And that's where we're operating. We don't, well, it's not Sudbury, it's not Montreal, it's not Vancouver. Vancouver is a whole different thing. And we don't care about that. All we care about is Toronto. And Toronto, 416 Toronto, prices aren't going to go down very much. You know, maybe some.
Resilient. I think the word for that is it's a resilient market. And if you're interested in watching a video, in fact, that Robert mentioned talking about creative financing, VTB, we did do one a few episodes ago. I'll link it in here in the description so you can watch it. Make sure as well, if you're watching this, to click on like, click on subscribe, and thumbs up, click to subscribe, and comment in the comments below so that you can talk with us and join our real estate chat as well. And so Robert mentioned about creative financing, VTB, the fact that if you did buy this year, chances are you're not selling next year, because obviously this is the home that you're going to be in for the next 5, 10, maybe more or less years, depending on, of course, if you're an investor. If you're an investor and you bought at peak because you anticipated that things would get better and you put your 20% down, that 20% is gone. You're more or less underwater at this point, and it's a matter of cash flow. Are you getting it rented? Is the rent covering your carrying costs? And if not, now you're looking at options. And interesting point that Robert said, in as far as we're looking at inventory, and everybody's looking for solutions for inventory. And the government during the election, the campaign was about how to put more inventory into the market. But the truth of the matter is, a lot of people who are not selling may be selling or listing their home in the spring. And if that happens, then there will be an onslaught of inventory and competition, which will further damper the growth of prices, simply because the affordability is affected, and supply, of course, being relatively the same if demand shoots up. Supply, relatively speaking, if it starts to increase with the same level of demand, then you're going to see a lot more inventory on the market competing against each other, compelling sellers to adjust their prices downwards.
A point which we have to give credit to David Rosenberg on this point, is this phrase that in 2023, flat is the new up. It's not going to go up. Flat's as good as it gets.
And we'll be talking about that in the 2023 to 2024 video, which we will probably be filming a year from now. So stay tuned to that. Now, foreign buyer ban. So the past couple of months, the government has increased. First of all, they did an increase on the tax, 25%, and that was to take effect in October. So that was in place. And then after that, they subsequently did an all-out ban, which confused some of our realtors, especially Robert, during our office meetings. We talked about this, and some of our realtors were asking, okay, so the taxes are up, but now there's a ban. What does that mean? Which one is going to be taken into effect? So as of January 1st, if you're a foreign buyer, and you can Google it, just Google what Canadian foreign buyer is. If you haven't bought, what are the implications now? So Robert, is this something to be worried about? Like, if you're a real estate agent watching this, you have a foreign buyer or a client who's a foreign buyer, or technically is classified as that, or if you yourself watching this are not a permanent resident of Canada, not a Canadian citizen, and considered as a foreign buyer under this ban, should you be worried, Robert?
Okay, no. The person who is affected by this is a spec buyer, and the spec buyers have vaporized. So it's going to affect pre-sale condos. And so they're just going to have to do a dipsy doodle. Like always, they get around the regulations by having their brother's friend buy it, and they have a side agreement and stuff like that. But those things, that market's dead. So put it through in June. I didn't even find out about it until October that it had been done as part of this omnibus budget bill. And a few of the liberals went on YouTube and said how it was going to help affordability, but it was too late for that. If they'd done that 20 years ago, it would have been significant. It probably would have been good. In my view, why were we letting foreigners buy the best pieces of real estate in the last 20 years? To force the price up? We want that? No, we don't want the price to force up. We want the price to progress reasonably, regularly. So foreign buyers tax is too little, too late, big noise, no effect.
And it's more so for, I guess, a popularity, right? Getting their agenda through, saying, "Hey, yeah, we did something about it. Too little,
Act
too
like
late."
they're doing something. Yes, act
Yeah,
like they're doing something. And it was
and the fact that it came after, I mean, look at it. Interest rates have gone up. That already took,
that was the
uh,
big.
wind off the sails off the market, and that already dampened the market, dampened the sales a bit, and dampened the prices a bit. And saying a bit is obviously an understatement, but adding this now really doesn't make any sense. And so I had a couple of questions from some colleagues, and from people who are investors in real estate and also have properties here. And it's like, what's the big deal at this point? The percentage, we don't have the exact numbers, but obviously the percentage of foreign buying doesn't form anywhere near the majority. Most of the sales happening are from local or buyers who are considered to be active in the real estate market. So yes, there is, and on the way up, the market saw a lot of speculative buyers, investors that are looking to flip or to ride things up. And as Robert said, when it came to the pre-con condo market, that's the biggest in terms of foreign buying and parking money here in Canada and waiting for it to grow. And needless to say, we're seeing assignments now where the assignor is willing to lose money. Forget about even breaking even. Some of them are losing money at this point. And so if you're looking to buy an assignment, start looking for these assignment deals, because I mean, I can't comment, and Robert can't comment probably either, on whether you're going to make money or not in the next 2, 3, 5 years when this actually gets built, provided everything goes well. I mean, perhaps you'll probably be positive on your purchase within 5 years from now when the projects are probably completed. But the original buyers who are now the assignors of these pre-construction condos are not hanging on to them. They don't have the confidence to hold them through till completion, probably don't have the money to get the occupancy. Once that's forced upon you by the developer, you got to pay the occupancy costs and then eventually the closing costs for that. So they're also having a pretty bearish.
And then the HST, which they weren't really ever thinking of having to pay. They were thinking to flip it before it was ever closed.
Exactly.
So,
and then to add to that, even the HST that's going to be charged on you for assigning it. So, I mean, like it's just absolutely crazy as far as that market's concerned. So since this is our final episode for 2022, Robert, any final words, pieces of advice for anybody looking to make their move in 2023, for somebody sitting on the fence right now, whether they're thinking, hey, I'm a seller, should I list, first week of January? Should I wait to see what the next 2 or 3 weeks of January look like before I get into the market? And for a buyer, should I spend the New Year's Eve weekend and New Year's, and I guess some realtors will be working January 1, but should I look for places now and should I make an offer now?
well, to answer your first question first, if you're a seller, hurry up and put your property for sale and put it up for sale at about 10% less than what you could have got at the peak of last year, and see how it goes for the first 2 weeks. If nothing happens in the first 2 weeks, then you're going to have to start thinking about creative financing ideas. And nobody knows for sure what's going to happen on January the 15th, February the 15th, March the 15th. But those are the traditional days when the spring market gets going on January the 15th, the Saturday after the kids go back to school. By February the 15th, we know what kind of a market we're going to have. What's the pace of it? What's the tone? What are buyers thinking about? Is it a buyer's market or a seller market? What is it? And by March the 15th, it's full blown, whatever it's going to be. If you're a buyer, then you've got to 2 months ago start looking at the areas that you think are good. Computer Sort, any real estate salesperson that's a member of the Toronto Real Estate Board can set you up with sorts that give you. And you're looking for very specific criteria. And you're looking for those very specific criteria. Plus, you're looking for a seller that's been there for a number of years, 10 or 15 years, the better, because he's got tons of equity. And you go and see the house and you chat to the guy and you find out all about him. You see whether, what's he going to do with the money? You're looking for someone who will help you with interest rates over the next 2 years, which, as I said before. So there's no reason to do nothing. You can do nothing. But if there's no buyers and you are a buyer, then everybody wants to please you. If there's tons of sellers and you are a seller, then you've got to make your property as attractive as possible. You make your property as attractive as possible compared to everybody else with exactly the same thing, through price, but this year particularly with an incentive to help the buyer over the next 2 or 3 years, bringing his interest rates down to somewhere around 3.5%, 4%. People will pay that gladly. They don't want to pay 7%. They don't want to qualify at 9%. And they don't want to take on a 5-year lock for, 575. They just don't want to. But it's not going to come down to 2% again. It's just not. So I don't know if that answered your question, but that's where we are. And you'll see that it's true on March the 15th.
Well, that's what we're going to find out. So a few months from this episode, we're going to find out what direction the Toronto real estate market is headed in. And it's not about whether we're right or wrong. We're just looking at the data, looking at where this projects outwards, and looking at the various realistic variables that will affect this market. So if you're a seller, watch the inventory, watch what fellow sellers, your neighbors are doing, and see if once these listings come up, you've got to browse your your favorite app, your websites, realtor.ca, remax.ca, Robert's app, my app. Look at the listings that are being listed on the market and have a comparison in terms of what condition your home is in versus the competitors. If you're a buyer, have a look at the inventory levels in the areas that you're looking to buy. And as Robert's been known to say, you just got to look at that for that one home that you see yourself and your family living in for the next 5, 10 or so years. And you make an offer on that. You're just buying that one home, and you've got to have a long-term view of the market. These market cycles have happened before historically, and that's why Robert's been a great guide in terms of being able to navigate these difficult times. Because if you've got a short-term view and your only market that you know is the past year, well, this market has happened before. Just the circumstances have changed, but in terms of where prices went, the interest rate variables, supply and demand, this has happened before, and the Toronto real estate market is resilient. You've got to look at 5, 10, 15, 20, 25 years from now. The question will be, why didn't I buy in 2023? Make sure you read our blog. It's in the description. Make sure you click on the thumbs up button for this video. Make sure you subscribe as well. And most importantly, type into the comments, ask us questions. Thank you for those of you who are interacting with our videos and providing your comments, providing your insights. Those are very valuable. So thank you so much. And we hope to continue making these educational, informative videos to help you make a decision in the real estate market and where you decide to go in 2023. Thank you so much. Have a fantastic new year. Thanks for watching Real Estate Chat.
Happy New Year. Bye for now.
Bye for now.